Great. All right, let me go back to my ES that I was talking about here briefly because it was a significant pattern that I was showing back over here from a daily standpoint. The last time we hit this, what I call a ratio size setup, and for the most part, all that really is saying is that, while we have these range-bound oscillators, they're limited in what they can tell you information-wise when you reach certain points of overbought and oversold. And so, in this particular aspect, we've reached this extreme point, and yet we've got a bifractal at the same time. And I always say, okay, we have to take a look at the next day coming through and see where we're at, and determine now, I can get a pretty decent percentage just knowing that this yellow line is above the orange line. It sounds simple, but the math behind it is significant, because what it does is it tells me that, yeah, I'm likely to see a little bit more of a downdraft before I get any pop. And the key I'm going to be looking at will be my up-down power. Well, typically for that ratio side, we look for around 80 to 120 point decline, roughly. So significant. And in fact, it worked out. To trigger the end of this longer pattern, you have to have the yellow line go all the way below the negative 13. That doesn't happen until over here, and then climb back up to the magenta. So that was a significant pattern the last time we had it. Now, we ended up getting our red dot short just a few days back, and we came across and we popped up, and I even put these daily videos on YouTube for everyone to be able to go back and look at. And what it showed was we were waiting for this low. Now, this came in futures after hours one day when the Congress adjourned, and we spiked down. We moved this out of the way, and you can see how far that wick was. And like I pointed out at the time, we dipped below the red line. We're likely to retrace this low. So here we are a few days later. Yes, we've gotten some additional buy signals, but a little bit interesting here because we were the same way, yellow above the orange here, but that wasn't the case on the INX, the cash index. So you had a little bit of a disparity between the two indexes. So what we did was we sold puts that were out of the money, looking to catch some premium, expecting that, okay, if it does decline, fine. If it didn't, then we were prepared for a nice up move. But either way, catching at a discount, we're still going to want it to be long overall, because this was just going to allow for the overall market to make its down move. Now, we're pretty deep here below the red line. Negative 68, that's pretty significant where this histogram goes below here, and suggests that we're likely to, well, even retest the low that we've just made. And if you'll note down here, we're getting pretty low on the power momentum reading. Readings around 6 become powerful for turnups. Now, it's interesting because I started out this, we were up 6 or so hundred, and we saw that red dot, and just was playing with the stop to show you how the matrix worked, but I didn't know I didn't have sound at the time. And you can see how it flipped. Now, that was because we saw the 10-minute red dot short had come in. This one right over here. And it's calling for a decline all the way back to 1397. So that's looking for a few point decline on that 15-minute chart. So instead of playing around, I should have just taken that. But that's okay, because what we're doing here is more for giving you an understanding of what to look for. Now, from a daily standpoint, also on the ES, I'm going to be looking for this setup here on my up-down power. As long as it stays positive, I'm looking for my first rising histogram as a major buy signal. And that would be something to point out as well. And then we turn to our shakeout, because what I want to see is that yellow line move below this blue. And that becomes significant because it represents an oversold condition beyond what your typical stochastics RSI would, get below a 20 level. But the problem with those is they go below those levels and they just bounce around there. And what do those bounces do for you? Not a whole lot. Then you have to start looking for divergences. Well, how do you know which one's going to be divergent and which one's not going to be divergent beforehand? You don't. So in this particular case, we look for this dip below the yellow, and you can buy your first rise in the extreme, not the extreme histogram, but in this shakeout histogram, rises, which would have been right about here. And again, in red trend, this is why I'm always so keen about talking about red trend. You have to buy discounts in red trend. It makes no sense to just, particularly when you have a downside bias, to just randomly buy. You want to be looking to capture a portion of that, and then even to trail it lower. There's no need to be, hyper or anxious about jumping into setups. Because sometimes for our members, when I suggest that we sell puts, some people say, "Oh, I can't sell puts." I mean, that's fine, but it doesn't mean you can just go out and buy it. You have to wait until you've reached where, number one, the strike is, and then the amount of premium that we've received before you just decide to, go ahead and buy. And even then, at that point, there's usually no reason to just go ahead and buy. You put in your buy stop and wait for price to come back up to you. Okay, so it's powerful that way. Now, we talked about this from my daily reports that unfortunately, when this is like this, you expect lower price. It's just the reality of what these readings are explaining to you, and it's from a macro sense that they're getting these little subsets. And it was funny because, gosh, it was on Christmas that the actual StockTwits posted a article from, in fact, I should just go there and look at it. I retweeted it, but basically it was talking about how buyers in large groups now, because of the algorithmic trading, and what he did was he took it and equated it to a flock of birds that fly like an airplane. When you see them all together, it looks like a big structure. And then all of a sudden something happens and they all scatter. And then you begin to see all these little fragments. And so I had this brief debate going with, gosh, what is his stock twit's name? Let me look real quick. I'll just plop it up here. And it was pertinent because what I was trying to say is that, they were looking at money flow and things like that. And what I was trying to point out was that, it was Sir Isaac Newton. And my whole point with the topic is that these guys are no longer buying these giant blocks that everyone thinks these institutions are buying. They're buying in these small fragments to conceal themselves. And so you have to get down and conceal, find out what that type of concealment is. And it's usually a pattern of buying. And you just have to be able to see that pattern in order to be able to understand what their concept behind it. And this gets into support and resistances, because support and resistance, as you see them with lines where people have, traditionally bought those kinds of things, these buyers, they don't see it that way. They're looking at it from where they're getting it, and oftentimes they're looking at it at points where they've tried to break a low to get more shares and to move through it. And what he was talking about was on Apple. And let me go ahead and put, this is automation of PCLN, 78-minute chart. And so again, red trend, each bar, it shorts and takes just a portion of the ATR. What was the last trade it just did right there? Gosh, that was a little less than $1. Before that, even less than that, and a little over, well, a little over $1. So, I mean, that's all it does. It does it every single day. As long as this red trend goes short, green trend goes long. Let's see some of our dailies. There's CMG. That one's got the coloration, so we'll keep that aside. I'll put Apple back up here. So what we were talking about was Apple, and he was talking about the idea that Apple had seen these large buyers and that there was accumulation. And I'm like, while I agree in general, because we're seeing the bifractals, even the latest one right here in the halibut, odd spot for halibut, I gotta say. Normally halibut comes midway up, you get your catfish at the bottom, and halibut usually is further up, so that was a little bizarre. But what I was pointing out was this power momentum, and I was telling him within that while in general that's true, one, our shakeout tells us when institutions are really buying or when they're distributing, and then two, we can get even more detail from a day-to-day standpoint with the power momentum. And at this point on Christmas and that we were talking about, even though I had the signals, you still had the yellow above the cyan, and let's take a look at the shakeout. This pretty much tells it all. Okay, there's minus 20. Let me move that to a right justify. So, okay, that's minus 20. Typically, institutions are not really getting inside until we're like right here at minus 1250. So above 1250, fine. I'm okay to say, go for it, go longer, strong, attack it. But when you're going the opposite direction and consistently we're below the minus 12, I'm like, you've got to be cautious. You cannot be looking at this from a 78-minute standpoint or even 30-minute chart. I was telling people, you got to stay on 10-minute now until we see some improvement because you have no significant buyers. And there's just no other way to depict it. Now, is it finally positive that you see the yellow line below the blue? Yeah. But at negative 35, this is going to take even longer to resolve. By no means is Apple going to turn around on a dime here. And now we've dipped below the red line. Now, it was a surprise here when we had this TradeTheMBI. We dipped below the red line, and so even after the pop, we said, okay, it's going to be short-lived. And we expected to retrace back to these lows again, which is why I was adamant that the 505, 510 range was attractive in that standpoint. It had a little bit more of a downdraft right here to around the 501. So between 505, 501 area is where you would expect price to return. Now the key was you wanted price to return here, but with an extreme histogram that was above the red line. And that's not the case. Is that clear? Am I making sense with that? I know I'm used to seeing it. But if you have questions, just go ahead and type them into the chat thing, and I will certainly address them. So, I mean, I can see it over here on my sideline, so I constantly review back to it. Now, from an intraday standpoint, let's go ahead and take a look at Apple intraday. Where I have my little intraday chart. Is it right behind here? I've got a ton of my dailies. Yeah, Apple 15-minute. I have my intraday chart. I just got to there we go. The way I know that this is an intraday chart, let me slide this over so you can see on TradeStation, we have our radar screen, which allows me to put in all the different stocks and their time frames. Okay? And then I can link the stock and then the interval in the same colors. So as long as I match the colors, whenever I click it, so if I click Apple right here, 15 minutes, it's going to change my stock picture to Apple. Alright, and what price do we see Apple heading to? We're going to talk about all of those things. But I think it's reasonable, just from a macro sense, to look at Apple and say, okay, you've got to expect somewhere between that 505 and 501, particularly with it being at the different dip below the red line of the extreme histogram. Let me see, when I talk about the shakeout reading being at the extreme negative, once you get past the negative 20, negative 24, we're talking weeks to resolve. And by resolve, I mean what they do, and if I slide it back up there, I can kind of briefly show you. What they'll do is, when you get to this kind of a dip situation, what they want to test is they'll test the upside resistance in the form of how many shares. Now, I appreciate that everyone loves Apple, and I understand that, and that's why I go over it, because it's a good teaching tool, because in this particular case it's been so ugly that when it was all positive it didn't have as much value. When it's like this and it's really ugly, it makes more sense, because then you can see the little nuances of it. But we got right here, and it was just shortly after it had already had this massive dip. Everyone's like, oh, it's gone too far. And then we shot up, and it's like, oh no, we already got oversold. Overbought. Because the extreme histogram already went positive in red trend. That's not a good thing. Anytime you see this extreme histogram getting blank, and this makes it very easy for me when I look at charts. In fact, let me just squeeze the time frame. I'll have a chart like this, and it's like, boom, immediately when I see these void areas, oh, overbought area, And we even had the situation here where short signal, people thought I was nuts back then we ended up with a buy signal here, and then we got the red dot, and I told everyone to short from that standpoint. And they're like, you're out of your mind. And it was like, look, it was already overbought. Big spike up there, then boom, got overbought early. It took a few extra days to resolve, but eventually it just rolled back over to the other side. And it was interesting because you just started getting to a point where you had some decent involvement. And the problem with that is that when institutional guys start buying in, and then price falls on them, when they get out, it's ugly. They usually drop it pretty quick because they don't hesitate. They get out. And a lot of these people are bag holders in the sense that they just keep thinking they're going to keep adding. And that's fine. They can do that because a lot of these guys are, with the mutual fund money and that, they get it every, quarter. So they're continually getting new inflows to go ahead and apply it. But what you're seeing from this negative 35 is, no, they're not applying any new money to this setup at this particular point. And so while you can look at large block trades or whatever and suggest that somehow that money flow is real, it's not. It's easily manipulated. And the reason being is this is done off of moving averages. All they're doing for money flow is taking a high plus the low plus the close and dividing it by 3, and then determining whether they think that price moving higher from a higher close is money coming in versus money going out. I'm sorry, with the algorithm trading that is capable now, they're coming in such small fractions that they're looking for tiny imbalances, and you're not going to see it. But the shakeout is reflecting it. I mean, at minus 35, that's well, it's been distribution from all the way back here when we got the green dot, and I was warning people even with the green dot, just look for small bursts. We started to get some positivity when we ended up with the catfish, but the shakeout immediately rolled over on it. It was never an improvement from there. So let's look at the 15-minute chart. And this is pretty much I want to say nude because it doesn't have the extreme histogram or any of those things on it, and showing a pretty ugly day so far, even from dot alert standpoint. But again, this is where I point out, in this kind of a red trend, when you get an orange dot that comes in, it clearly says it's a red trend. You have to trail this lower, and by the time you got 5 dots down the road, you're already significantly below where the signal comes in. And even with these signals here, again, you're still in red trend. You'd have to look for the discount. So what's that discount? I typically tell people to take the high and the low, and you want to start with a third discount from there. So in this particular case, you're looking at $2. So somewhere around 70-something cents you would need for a discount from the price going lower. So at 509, you'd be looking at, right around 509 even for your entry, where you would even think about putting your buy stop. Well, that's back down over here, so at that particular point, you're literally just trailing lower, and that's where you don't want to jump in, particularly when you have this kind of negative sentiment in general. But if we look at a 78-minute chart, it's going to be worse because here's the thing. You're looking at a 78-minute chart from broader upside signals, and we had this big short signal that came in through here. It got resolved. As soon as it got resolved, it ended up with the green dot buy setup, so that sounded pretty good. But this is something I can't depict for you in the dot alerts. Shakeout had come up, already started to roll over, and gosh, from right back here, it was already minus 12 in the next bar, and has not even begun to perk up. But now, this is the good one, where we can slide this up. You can see now that the yellow line has dipped below the blue, and also below this little brown line. And let's take a look at some other areas where that happens. Okay, so it's not below here, finally dips below here. Now I know I have true oversold. Okay? You're not going to see that. All you're going to see from stochastics, RSI, is this thing just hovering along the bottom. And boom, instantly you get your first rise in that histogram. You can still buy at your discount for red trend, and price takes off from there. And I'll get people who often trade you can literally just use the shakeout, and as long as your histogram is rising and stays above the yellow line, you stay with it. As soon as it dips below the yellow line, you're done. That's it. Yeah, the shakeout readings and these sorry, I hit the mic. There overrides the dots. They're incorporated into the dots. Some of the fractal setups utilize elements of what's deriving the shakeout. Having the actual indicators makes it a bit easier to utilize these, because even though I see my red dot short setups coming in immediately after this, I know that immediately after a dip below this far, I'm going to get a little bit more of a carry-through run from a shakeout. There's no way to describe that in a dot. Um, yeah, it's not possible to give it that detail of precision, because you have follow-through moments, and this is something that's always difficult for people to deal with. They think, oh, it's got to be black or white. Well, it's not black or white. This is a living, breathing machine in the form of people buying and selling. And so when you have that kind of flux, you have to be able to adapt to it. And what you'll get is these guys will hit, typically they'll look for areas where they think they can pick up shares, and do so quietly. So they look for breaks of where they think people would put stops, support and resistance lines that you would typically use. Those are 1s and 2s, and they love to go through those, because by going through them they can pick up shares, and it doesn't look like they're buying, because you can have a net end where the day is lower. It looks like a distribution day when it's not a distribution day. It's actually a buying day for them. And this is how they conceal themselves. I mean, it takes a lot of work, but it's real money, because if they can capture enough shorts into a setup, or enough longs when they're selling into them, that's exactly what they need. And now it's less about retail guys and more about, well, your day traders and, mid-level institution guys, because mom and pop have pretty much abandoned the market. And I think you can see that. You can look at a lot of the different articles that talk about the distribution out of mutual funds and things like that. So now you're playing against a little bit more of a savvy crowd, and so it's a little bit tougher. But I think I even posted that just the other day there. I read that article about the algorithmic trading in that. And it's like, some of this stuff for me is sort of been around for many years. It's funny that people are just starting to pay a little more attention to it. And so if we go through, though, the 78-minute chart, you can see that after you had that peak, the histogram stays below the yellow line, and it continues to do so. Popped up right here. That would have caught you. That was a good buy signal right there, that then broke down pretty quick. But then if you're looking at your overall daily, you get a little bit of a heads up. Besides, you're not going to attack this, even with an MBI in that, without looking for the discount first. And so by the time you're following with the discount, it gaps lower. And we even went over the setup as it took place, so I remember that one. Then you get the short 120 coming through here, and again, even with this 147, you got to buy the discount. So in this particular case, I mean, that's $6. So you're looking for a minimum of 512 on the downside, and then trailing it lower. And with this ugly reading, though it's interesting, because now, like coming Friday or the beginning of next week, it's going to be attractive. And so I'm going to be sitting there like I did the previous week, when I was all anxious for everyone to buy, going into that Friday, and everyone thought the S&P was going to fall apart. And that it was like, no, that was a good setup. But again, I knew it was going to be short-lived because of that shakeout being so ugly. LVS. Now see, there's a orange dot setup right there within green trend, and this has my ABM, which is trend following stop. And typically when you get below the cyan line right there, that's your warning to be below. Oftentimes it'll happen, you get below it, and then you get your buy signal, and then usually what I'll use is the ABM level 4630 up here. Actually, what is the exact number? If I slide this over, you can actually see it, because it will say what the actual reading is. 4630 on the fast line. You'll see it says cross line, fast line, mid speed. 4630 was that particular level, so interesting there. And I've been talking a lot too about PCLN, and it was positive. So let me see if I have a PCLN right here. Okay. Let's see. Question was Apple. What makes that ugly? Oh, well, particularly what was attractive about that setup there on the Apple was this dip below the yellow line on the shakeout. And then all I'm looking for now is the power momentum to shift. Now you can look at the relationship between these last two numbers. So whenever you see my chart come up, you can always look, if I've got the power momentum on the particular chart that I'm showing, what you're looking for is this cyan colored greater than the yellow, and that indicates that you've about moved. Now every time Apple has reached this 6th level or lower, has tended to cause a little bit of a pop. It was weak right here in the red trend, a little bit more positive at that particular point, but look at how high that yellow was in relation, and it didn't flip until much later. And, oh, what do we have on here? I have the, yeah, I have the MBI Opus for this. Let's look at a performance report for this one so far. So this is a variant that I've done, only a 56% win rate. That's pretty low for that one. And that's because I don't think I've gone through with this one and even put in together. Oh, that was when we started to do the other day. I haven't filled in all the remainder of the MBI Opus because I had one of my members create it. And let's just go ahead and take a look at it because he created it for our website. He has the indicators, and he went through and did an optimization and created a setup. So if we scroll over to our website, scroll down to MBI Opus Strategies, it's right here in the performance setups, and then all the way down at the bottom I added this one. It was an MHT file. You can upload it, and he created this performance report that created what was 95% win rate on 121 trades, and then it was at the very bottom, and everyone can look at this. So this is what the MBI Opus looks like, and you can go through, you set up what's your initial capital, and it asks you how many shares you want to do, and then you go through each of the different setups. And so he went through and made the adjustments and created that win rate over, gosh, what was the time frame on that chart? 2007 to 2012, so 5 years. So that's a pretty decent span of time. But that's a lot of filters to go through, and he ran through the optimizations, and anyone who has the indicators can do that with TradeStation. It makes it very easy to do so. Could Apple have a good day tomorrow? You've just dipped below here. You're still at 747, 625. You're at the beginnings of it, because now with this dip below the red line, your first move back, this is one of those where you can begin to utilize the high or open of the day here, and that would become your strong point. And then what you want to start trailing it down as you get closer to what eventually will be a retest of this low right here at the 501, 505 range. And so we get right back to that same area right here where I was very attracted to it, and it got its nice pop. But you have to be dynamic. You can't just expect that, oh yeah, I'm going to buy here and it was going to jump to the 555. It's like I pointed out, and I was trying to be very clear that, well, yeah, that's still the upside target, and that upside target hasn't changed, interestingly enough, because each of these bias fractals that have come in all at the exact same levels, producing roughly the same upside target. But if you need shares, and if you were an institution buying, this is what you would be looking to do. The problem is, if we were seeing an institution buying and sucking up a lot of shares, you would not see a negative 35. What you would see would be somewhere around negative 10, negative 12 on a lower low. So it's important to point out what you're not getting is you're not getting strong interest inside of Apple. So you're just going to have to continue to expect that you're going to have to trade it from smaller time frames, quick hits. Oh, and I've actually had people ask me, it's like, well, could you just be short? It's like, well, yeah, I mean, initially, way back here is where we had our initial short setup, when we ended up with a ratio psi short signal, as well as these red dots. I mean, those were satisfied, but it turned into the ratio psi signal right here, and the big one, no less, with the, now see the difference between one that rises and one that falls. The orange line is above the yellow right here, so we ended up with continued pop. In this case, the yellow above the orange, and you fall. I know that simplifies it, because to go over the math with you would be kind of just a waste of your time, because it's not going to make any sense. So at least that gives you just a visual to look for. So when you see those kind of setups, and again, like I've talked about with the ratio, expanded ratio histogram, it's, this is a highway, and as long as you stay between this magenta line and the green line, and everything's fine, you're right in the middle of the road. But it's when you deviate and get into the shoulder, which happen to be where the white lines are, and then you've changed freeways when you move off into these extremes. and this is something you don't get from your regular oscillators. That's why I try to point it out. Let's talk about PCLN, because I know that there's some people that just been anxious for this one to fall apart, and they're looking for this gap fill right down here, 586 range, and we've had quite a few bifractals, and these were very attractive setups, and still very attractive, and actually today very nice with that. Notice here, 876 to 870. So this is exactly the opposite of what you're seeing from an Apple. Now you're at negative 13. It's right on the threshold. So one turnaround here on PCLN, and this thing could explode to the upside. I mean, you've captured more than enough shorts within the overall setup here. And it was no surprise. I mean, we had these extreme yellow bars way above the cyan, so it wasn't a shock. But needless to say, even though that you are below the red line for the extreme histogram, you'll notice it's higher. So, but you have to have your confirmation of your first up move. Now, oftentimes though, will I take advantage of a setup like this where you're getting weak upside call premium? Yeah. Is it worth playing it for just Friday? That's a real speculation. I mean, that we can take a look at smaller time frames. Why not? Let's do that. Because that's where you would then need to turn, because just looking at it, straight up as it is, no, you can't say that that's the way to go. Let's go to a 78-minute for PCLN and look at that. If there are any other dailies that you want to go over, just go ahead and just type them in there, and as I see them, I'll go through. Remind me, I'm sipping a little coffee. My throat got a little rough. I think I was out in the cold a little bit too much. Not used to that cool weather out here in the West Coast. So 78-minute chart, not a whole lot of signals. We just got a 78-minute buy setup right here. Looking for the discount. That's $8, so $2.50. So 98 range would have been attractive. Did we get down there? Yeah, 97.15. So that would have been right about here from a buy standpoint. So I know some people do have PCLN. That actually would have been a buy. I would have taken there the 98 range for PCLN on a 78-minute. That's worth it. But let's look at a little bit tighter frame, 30 minutes. Because this is what I typically do. I'll start with that daily. It's like, okay, yeah, I see there's the potential for an attractive setup. Go to 78. I've got a signal from a 78, but you saw that deep red trend. Alright, no change in that deep red trend here. Orange dot from a 30-minute standpoint, not bad. But now look at this. This is what I love to see. You dip below the yellow line, and this is where that shakeout can become very important. And this is a much more advanced reading of the shakeout indicator when you're looking at this yellow line going below the blue and then waiting for that first increased bar. Here you have a lower low on a much higher shakeout reading, and this is a clear divergence that should resolve to the upside. So that's actually a clean one. 15-minute chart for it. So ADT, COV, okay, ISRG. Oh, you know what? ISRG was a precursor to everything that was going ugly in the general market, and it showed that exact same ratio psi on the expanded ratio histogram that I pointed out for the market. And I said, this is, if you see this on the market, this would tell you that you're going to be moving lower. And it was funny because ISRG had showed it beforehand. So some decent signals from short setups. They got their short early on. That actually resolved itself correctly. You've had a couple of orange dot buy signals that you would be looking for discount. Would still have you in them. None of them have stopped out. Then you had a most recent one. So looks like this one would have resolved itself to the positive. And if you had bought your discount, in this particular point, when you're that far away from it, I usually say, hey, you got yourself your profit in that. If you didn't get a second signal, and then you did end up getting another signal right here, then you definitely want to take advantage of that one. And in this particular case, that actually worked out pretty well for PCLN. So good job for people who had the dots on that one to be able to take advantage of both the short and the long side of it. So that one worked out nicely. Go figure. It happens. And this is the thing. I mentioned this when I made the special offer where I let everyone have all the dot alerts for through the end of the year here, and I was pointing out there's plenty of time. You didn't need to rush it because it goes all the way through Monday, and we were seeing these short readings from the overall market index, and so you wanted to be a little bit more cautious, and that's why I went through a lot of the different stocks on the last live event and pointed out, hey, you've got to look for your smaller time frames when you got stuff that's really ugly. Let's take a look at Google, because Google actually had some, Amazon first, why not? We're here. Does anyone mind? We had the short setup with Amazon. It resolved itself just the other day. Now, this is interesting because you'll find these a lot. These green dot buyers, they love to come in and they buy what seems to be extreme moves to the downside. The key for looking at those is I always check to see, okay, this is a positive one because it didn't reach the red line. Not as positive when it reaches the red line because I know that I'm going to expect a little bit lower move. You can get the alerts by text or by email. Yeah, that's easy enough. I can actually put up the browser. That shows you how many have gone out so far today. Over 200 plus. So that's quite extreme. Let's slide it over here. Let's click the dot alerts right there. Let's go and look at one. So this was an Amazon 10-minute. That was from early this morning. So this was just letting you know that the trend was turning red, and that's valuable because it lets you know that at that point I got to be looking for discounts, and it's important. But you can see, let me shrink it even more. You can see the times. Now these are West Coast times, so I always tell people you got to add your time frame to it. But look at that. I mean, I just scroll through here. What's the most recent one? Okay, these are alerts that would just be coming through. Scroll all the way up. What did we get here? This was for Goldman, 30 minutes, GS, MasterCard, MA, orange dots. So we can look at those. Let's go to this setup here. Alright, and so this is what typically happens for individuals. It forwards them as they come in. I have a question about the indicators. If you get the indicators, the default settings within the indicators, in most cases, are already preset for, like, for instance, the shakeout. Once you apply it to a chart, that's it. It's going to look just like this. There's nothing to change. Power mode, the only thing you have to make are the adjustments for your histogram. So, for instance, if I click the power mode and I go format, or the shakeout here, so in the scaling, it's the right axis that shows the price on the right hand side over here, and it's in subgraph 3. Fine. But from a style standpoint, I have to make the histogram. That's why I called it histo, so that you would know to put it as a histogram. And that makes it real easy, so that visually, because if it were just a line, it really wouldn't have as much impact on you. And that makes it straightforward. Again, like with the expanded ratio histogram, you don't have to do anything. There are no adjustments to make with this. The only thing that you would change with this is because orange is not a default color. Don't ask me why. I mean, I can do the basic colors. So for X812, you actually have to go to Other, and I select orange. Do you have to have orange? No. You can pick any color that you like. They're all right here. It becomes easy because at least at that point you know that, okay, yeah, orange is something that you see on my chart. So, and the reason was it was enough of a differential in the orange to show the relationship between the orange and the yellow, because while they're close, they do represent significant variations. Oh yeah, there's a YouTube instruction for all the installations of these things, so it's pretty straightforward. I did have a question about whether or not, because I only went over like on the dots, putting in one of them. They're all the same, and you don't have to make any adjustments to them because the colors I've already predetermined, and whether or not they have the numbers that have been set ahead of time. It's the same with the trend model. In this particular case, well, let me show you something here, because if I take the trend model and I disable it, that's what price really looks like on my charts. It's just white. And the reason being is that is going to show up right here. And the point about having the trend model like that is because I want to get a good idea as to generally what I'm looking for in direction. Am I looking more towards shorting, looking for a discount if I'm getting a buy signal, and am I oversold or not? And so like in Amazon, I can get a deep red trend, but I know that now, unlike right here, I know I'm overbought and I'm going to go lower. Here, I know I'm oversold because I'm below the red line. So it becomes a huge distinction when you're looking at the market, and so this is why some people say, "Oh, I look at your chart, and it doesn't make any sense to me." Well, when you start to break these things out, and you say to yourself, "Okay, yeah, I see I'm in red trend. Fine, I know the market. I should expect it to be going lower, but now I'm in deep red trend, and I'm below my red line. I know that I've reached an extreme oversold." Okay, well, that immediately attracts me to my shakeout indicator, where I then want to say, okay, is my yellow line moved below my blue or right at it? And like in a situation like this where it moves below and I got a higher histogram that's actually inside the yellow, that's your buy signal. And you can just write it. Now, I've also created for members and just released this one called the ABM. And the ABM resets itself off of GAMs and MBIs right now. I'm working on it to dot alerts where you'll be able to select it, and you can use that as trend following. Now, pretty close to the shakeout. The only advantage it'll give you over the shakeout is right here where you'll dip below the yellow line on a shakeout. The ABM will just kind of trail across, and the yellow line right there is there for a reason. It's a warning line. It means that you've finally reached a point where you may be actually close to a little overbought. Now when you get to the purple line up here, then you know you've reached a level. So I pointed out this one as it was taking place, and we can go ahead and draw a trend line. So for TradeStation, just right click drawing trend line right here, and you point out this one. As long as the shakeout was matching new highs, which it was not, because I had my lower reading right here after getting a red dot short, yeah, I told people even when this was rising, I was expecting us to get the retrace. Now, they wanted to short a lot of these different things in between them, but I'm like, we can get a bit more precise with our entries because we have the advantage of knowing that we've got both these setups, and in green trend, I want to try and get a little bit more of a pump in my overall price when I'm in green trend and I'm shorting. It's just the opposite of red trend for discount. So in this particular case, yeah, Amazon's a buy. Amazon's a buy, but you're below the red line. Okay, so you gotta wait a little bit. Is that a problem? Well, it's a problem if you're just going to try and trade options. If you're trading the stock, it's not as big a deal. Let's move this to the actual price for Amazon. So in this particular case, do I say you want to be turning around and buying the option for this week, 1 day left for Amazon? No. No. Even next week, not necessarily going to give you the same probabilities. Now, if you're looking at it from a longer standpoint, you're going to buy the shares, yeah, then you can start to begin to trail this lower, waiting for your first move. Now, to get more precise with that, do you need the indicators? It certainly helps, but you can still day trade Amazon without much problem. Even on our member page, the YouTube ones I had just uploaded from the actual website, and let me just go to the website again because I can show you where we have those upload instructions. It's always good to know. So back on the website, and if you go back to the indicators, right here on the indicator instructions, we detail it, everything from where you get it for the uploads to possible little errors you might get from your configuration, and I'll probably add in some of the little subtext, but these are all available on the YouTube channel. We go to TradeTheMBI's YouTube channel, just like that. I think I put it in a playlist. Let's scroll down here. You know what? I don't think I have them on a playlist, so you know what? I will do that. So that's a good point, because I have the live events. We have our uploaded videos. Oh, here it's uploading the indicators right there. I thought I had put it in there. Okay, so yeah, these pretty much just were created specifically for that. Those are the exact same ones on the website. So no issues with that. And then that's why I have the MHTs all on the website, because you can just go through and scroll down to the settings on those and input them, and you'll get the exact same readings overall, profit setups, the whole 9 yards. And I still left them so that you can even continue to. I haven't even gone through most of these stocks and optimized the various setups per each of these different movements. Now, within those settings that you have, are you really changing the program that much? No. Um, I left just a small window in those settings to make some finite adjustments within specific ranges, but the overall fractal concept you can't alter even with those settings. All you're getting is a micro adjustment. So when someone goes through and makes those little optimizations for Apple, have they changed the overall concept? No. All they've done is just narrowed it specifically to the way that type of stock trades. And I don't like to get too detailed in the optimizations overall, because the overall broader aspect of the fractal setup should work without having to get too precise as far as breaking that down. But it's certainly a huge untapped area that I have not had time to get to go through a lot of these different individual ones. Let's put up a different stock real quick. Trade station, we just right click it. I'll show you how we do it here. It just makes it easy, because they're offering that 60 days free to try them out. And so if someone is interested in the indicators and wants to try them out, said I'll let you try them out for a week or so and see how you like them. It takes time to understand the nuances. Yeah, that's an interesting chart. Let's get rid of this ABM real quick. All right, so oversold. Hasn't dropped all that far to be that oversold. And this is always an interesting one I love to look at. When you get people will usually say, oh, it's about to fall off a cliff or whatever, and I'm looking at it and I'm already seeing, no, this is pretty oversold. And look at that shakeout, barely -5. That's nice. You still don't have your ratio changed over here with the cyan over it, but it's close. So do I even know what this company does? No. Do I care? No. Doesn't make any difference. Apple, low of day, so Apple has declined some more. Yeah, not surprising. We know that we're looking to get back down towards that 501 area. So, a lot of these things don't end up shocking me, because it's like, okay, we can see that that's where it needs to go for the retest. Now, within that, okay, we get some people, let's go back to it real quick. They get super precise. When I get these little tails coming down, I don't worry about those as much as the open right there. So once I get below my 508, I feel pretty comfortable that I've retested, my area. I'd like to see it get into a little portion of it. But do I have to go to the exact low? No. And if you get into that kind of paranoia with it, the whole point is you're just looking to get a general range in there. The key in this particular spot was Apple would have been attractive if we'd been reaching this low at the same time having a higher extreme and an improving shakeout. Do we have any of those? No. Am I sorry? Well, yeah, but there's still hundreds of other stocks to choose from. So no, I mean, I just move on to something else. You're gonna have to be more careful playing now. Do I feel bad for people who are stuck in it? Well, sure, but I that happens to a lot of people. For as up a year as it was, I don't think it was all that easy a year to trade. I mean, we didn't do particularly great either. I mean, I think we're going to end up the year maybe 60+% return from our portfolio. Compared to the last couple of years that have been in the 100% range. So no, I think it's been a rough year. But that's me. EDT. Well, now see, that's positive. So we had the orange dot right here in green trend. Am I looking for a discount in orange dot green trend? No. Did I know that I could get one? Yeah. How? Well, go to my power momentum right here. Notice the yellow above, and look at the ratios just about to change. But at this particular point, you have to at least have your buy set up for the close price there. So when it dipped down, you want to start trailing it just a little bit lower. So at the worst case, you would have gotten in at the close of the bar. So let's slide this over a little bit so you can see what the actual projections were. Alright, so the close was at 45.12. The upside projection is all the way down there at the bottom, 46.47. Okay, and the stop was down there at 42.94, and hasn't reached it. It's getting close. Hasn't reached it. You had your gray dot short right back over here. That was fine. And this up target right here. Now, again, this is something I talk about. 1, 2, 3, 4, 5, 6. You do your sixth bar. You're working to get there. Do I set a stop at that particular point to at least lock in some profit if it doesn't quite make it? Yeah. Worst case, you set a break even. That's even an option in most of the strategies that I create, where at least you have a option to, say X number of bars after an entry exit if we haven't reached our target one way or another. Sipping my little drink here. What other ones do we need to look at? Oh, ISRG, that's what I definitely wanted to go over that. Because that had that original symbol. Alright, so right here, it was back over in this setup. We ended up with a gray dot, proceeded to go higher, but we had the positive extreme, so we knew we were overbought at that particular stage. And then boom, came down, and even with that gray dot, it was like, nope, you can't buy that green dipping below the red line. Gotta wait just a little bit, and sure enough, it's pretty much stayed flat to there. You started to see your beginnings of improvement. Now, it's never good when you have the cyan over the yellow and your price isn't rising, but what it is telling you is that you do have some accumulation with it, even though we're not seeing a bifractal yet. So we turn to the shakeout. Let's talk shakeout then. And you got your first attractive, so okay, you've moved underneath. You still have your shakeout at minus 18, but below the yellow. So what you're looking for is your first move back up before you can take a run at this. Now, typically in a case like this, what they'll do is they're going to test the upside resistance. And so you get this violent snapback to the upside. You'll often hear them referred to as dead cat bounce. Well, it's only a dead cat bounce if it gets overbought within that real quick move. And this is where sometimes people get confused because they'll get this bounce back and they don't know when it's overbought because it goes overbought on their oscillators immediately. We get to see it in a little bit more clear structure. Now, when I go from red trend to green trend, I know I have to count my 5 bars before I can really expect that I'm over bought or over sold to the opposite side from moving from green to red likewise. So that's where those trend changes give you a little bit of a bonus because oftentimes when you flip to a red trend, you've had that distribution, and so flipping back over to green trend, you usually get that exuberance, and it's usually the late players to the situation. No, I mean pretty much everything for the MHTs I keep updated on our website, so when it comes to looking at those setups, nothing's changed with them. All I do is update them periodically. Like for instance, we just ended up with another signal or two on the Iron Hawks. I'll probably go through at the end of the year and adjust what the win rates on some of those individual MBI Opus setups are when it comes to the website. Alrighty. So ISRG is still looking pretty ugly. Not ready for a comeback just yet. CMG, I had a CMG on here, but let's go ahead and take a look at CMG. Because I liked CMG when a lot of people thought CMG was going to break down. And then I got sad for CMG because it was going to be a short, and sure enough, it retraced the short already. It's doing fine though. No objections to it. It was back over here that we came down and ended up with some nice buy setups from it, And it was along this point where a lot of people thought it was going to break back down to these lows, and just wasn't in the read from what we were getting from the shakeout. And then we started getting the bifractal setups within there. Um, Came back down to these lows, and then we ended up with a big chunk of buyers all through this area that is oversold. And this just kind of shows you how long it takes them sometimes to acquire enough shares within these thinly traded setups. So that's always something to point out. Not everything is as liquid as you think, and if you are trying to buy a large block, you're not going to just go through and buy a bunch of big 20,000 share blocks. You're going to buy all these little teeny, every time it breaks of a low, and then it pops back up, and every time it slides back down, you just keep adding, because their whole point is they're looking for an average weighted price, and then they're looking for their target, for their pump. And once it turned to green trend, nice ride. And this is where your halibut guys, they always come in a little bit towards the end, midpoint of a run. But this consolidation is fine, and you can see that you're not overbought. You've gotten close a couple of times. This was the last time, but you met that short target right here. And at minus 13, that's fine, and then you've gone into the minus mid-20s. So this is neutral right here, nothing special. Now what I'd love to see would be a little bit of a drop where you dip below the 50 line. This right here, because it's very bullish. Excuse me, but I love that setup when it comes down to that move. But you want to see that move where you have the power momentum moving to the right direction. So you see how the interrelationship between these, where you want to look for everybody in the right direction. And then for CMG, you look here, the yellow line dip below the blue, and then it's off to the races, to the upside. And it goes from there. And then, we can get into the relationship of the red to the yellow. That gets even more complicated from that standpoint. So let's go back to intraday for CMG. I think I've got down here. Let's go to a 78 minute. See what it looks like. Well, now isn't that interesting? That's erratic. So not surprising that those short targets got hit. But see here, you can see the battle between these fractal buyers and these red dot short setups. And more often than not, they each get their way. I mean, this is something I talk about where a lot of people don't understand why it bounces the way it does, and it seems to do so in an area that's not necessarily a confluence of anything, but it's a confluence for them. These guys bought at this point. They were seeking this target. The short comes in. He's looking for his move to the downside. More buyers come in because he didn't get all of what he wanted, and then shoots it back up there. The short says, oh, I like that opportunity to go at it again. Comes back down. The green buyer's back. And it goes on and on. And, it's just kind of a classic play. Now, here's the problem for this one for CMG. If it gets back up to this high, it's unlikely that you're going to see that shakeout reach the same level. That kind of negative divergence, just like right here, is not that positive. It's usually resolves to the downside in that particular case. And that's where you then have to go to your daily chart, check it out, and make sure everything's good with that. We had short setups from FAS. Let's go take a look at FAS. I don't know if I want to change. Where did I do it? There it is. I can just click FAS. I think we had a short signal just a few days back. Yeah, we did. And it hadn't quite reached its full targets. Let me expand that. So we had the short setups from FAS for these big lines from a daily. The first target right there was 117 and then 113.19. So we haven't hit the 113.19, but it's on its way there. And the reason being, positive extreme histogram right here. See the differential there in midway? +6. Okay, so it's just going to come to retrace that. So does that make sense as far as the support and resistance line? I don't know that it does. I think what it makes sense to is these buyers, that's what their expectation from the short setup is, and they look to collect on their short. That's the easiest read of it. And then it's interesting that you're going to get very close to it. You're going to be right at the red line, and you're going to be oversold, because they're going to start to cover their setup as it gets near the target. And You know, if they get a carry through, follow through, fine. They may or may not be in it, but what happens is they don't always know how many shares are going to come available when they reach a target point, and so sometimes it breaks and it breaks down in a big way. Because they ended up with a lot more volume to the downside when they break a low. Or same thing happens to the shorts on the upside. They'll break above the high. They just don't know how many shorts are going to cover at that particular point. And that's why they always breach those levels. It's the only way to get a significant volume pickup. So I think what I'm going to do is we'll end it here, take a break, and then maybe we'll see how it goes towards the end of the day. If you have any additional questions, feel free to ask them. And then what I usually do is convert these, and I'll put them in the live setup there on the YouTube channel for you to take a look at. And you know what? When I come back for the next one, what we'll do is we'll actually make some trades off some of these shorter time frame signals going into the last hour or so. As always, though, continue to look for me on StockTwits.net. Trade well.